They've felt a lot of pain this year, like the numbers that were just stated. So 20% down is a pretty significant drop. But they've had bigger drops than that. 2015 was another more recent painful drop. I guess the question is, do you see it on the street? So investors feel pain in the real estate market, the stock market, but if you are on the street, you can see that they're still spending.
So what does the Chinese market reflect to you, and the Chinese currency in particular, which is nearing a very key level against the dollar, strong dollar at 7 against the yuan?
Yeah, so the lower growth projections by the IMF simply are showing that with the stock market down and the RMB down maybe 7%, maybe down closer to 10% by the end of the year. I guess that's why there's concern from the U.S. government of currency manipulation. But if you just think about it for the long term, any sort of tariff or trade war is a selective tax. Investors will need to also modify their selection and allocation thought process to think of what domestic play in the U.S., China, wherever it might be, will not be impacted by cross-border transactions, your supply chain, your sales force, whatever it might be.
Richard, is there any sense in your eyes that the Chinese government is losing control of its currency, that there's a risk that the reserves not so much will run out, but won't have enough effect to stem the decline of the currency?
I think if you ask someone in China, they'll say, yeah, there's probably a lack of controls. Money flowing out resulted in something like the Vancouver real estate bubble. There's concerns about cryptocurrency. So I would say that most people say, yeah, there's possibly a big concern there. I think for the global investor looking at China, you simply say, look, I can access China through Hong Kong because of Stock Connect, which accesses Shanghai or Shenzhen. You can't control what the Chinese government does. Actually, no one in China can either, because you can't vote for anyone else. So too bad. You'll have to just navigate as you would. And given it's a big drop in the market globally, do you want to allocate more to what you already have, Amazon, or something that you probably don't have a lot of, Alibaba? I think that's the only decision you can make right now.
Very quickly, just walk us through what would happen, Richard, if the U.S. does declare China a currency manipulator. There have been some hints, Mnuchin telling the FT today, warning about Chinese currency devaluations. The report comes out next week. What would happen if the U.S. Treasury did label that designation?
Yeah, so I'm trying to think if this is a short-term thing because it's an election year, and there's nothing better for a politician than to find a problem, point a finger at that place and say, I'm the solution for it. That's probably the shorter term. But longer term, I have concerns. It's kind of like two gangs shooting at each other, and who's the collateral? Canada, Southeast Asia, et cetera. Anyone who trades with the U.S. or China is going to be a problem. And if that's the result of the IMF's downgrade in economic forecast of growth, then that's a longer term problem. Then we have a real reason to see the elastic snap back and end this long bull market.